Well, welcome back, everybody. Hopefully you figured out now how to go in and out of your Brella sessions, and if you're listening to this, you certainly have. Just a couple quick reminders for you to continue doing the networking. That two-screen effect can work really well. If you want to pop out a screen to watch the live stream here, you can still network in another window with Brella and or do that on your phone. A reminder that if you go to the More section under Brella, there's more information on the certification program, and we'd love for you to participate in that. And there's also a virtual booth where you can go and talk for help. Or if you haven't joined the Slack community yet, please go ahead and do that. And there's good, robust conversation going on in Slack and another opportunity to ask for help in there as well. Well, our next session I'm really excited about, Sankar with Capgemini. If you don't know that Capgemini produces a global fintech report, it's just a tremendous wealth of information. It is one of those things I love to read, anxiously wait for it to come out. And he has graciously agreed to come here today to give us kind of the summary and the impact of this. I think this will create some really good discussion again in the chat and in the Slack. So with that, I'm going to turn it over to Sankar from Capgemini.
Hello there. Great to be here. I was watching some of the earlier sessions and some great conversations so far. So it's my first in this virtual mode. It's kind of takes a lot of work. So appreciate the organizers for what they have done. I'm a practicing banker. Today's objective of mine is to share some recent research that we have done through the World Fintech Report 2020. Next slide. Thank you. We go to the next slide, please. Yeah. So what we plan to cover today is basically we discussed was launched a few days before the COVID kicked in. So obviously we have done some adjustments for the COVID. We have come up with a concept called OpenX, which is all about open marketplaces and the roles that traditional banks have to play there. We are making some recommendations in terms of customer experience and what banks do the research. And what is it that we need to do now to go there and scale up in a hurry? So those are some of the things we will discuss today next. Yeah, these are some of the definitions we have used. No need to go through this. Following slide, please. Yeah, so this is a different version of the, which was there. Anyway, no worries. So basically, this is our fourth year of publication. As part of our research and development lab that we have, we do a lot of these reports. We do a World Payments report. We do a Asia Pacific Wealth report. We do a World Wealth report. This one is the youngest of the publications, fourth year in a row. We evaluated 50 plus banking executives interviewed, but the over 100 banking and fintech executives, including the fintechs, have been approached for 30 some markets. Obviously, we use this report ourselves in kind of formulating our strategy about each of the verticals in which we operate. And in the last report, we kind of looked at collaboration as a theme between banks and fintechs. And obviously, while there has been some collaboration, I think a lot more needs to be done in terms of scaling it up and industrializing it. And that's what we'll see in the report today. Next slide. So I'll start with what the report findings are, and then let us go and build it up in terms of how we got there. First and foremost, our thesis is that the traditional bank, this is one of the last year, 2020, in which they have to get there in a hurry. All our experience with customers is showing how basically banking is no more a place to go. Banking may be a service, but much like a service, much like Intel Inside, how do you take banking and put it in a global marketplace? So we'll discuss a little bit about what that is. And oftentimes we have promoter scores based on what the customer experience is. But again, a lot of work needs to be done from a middle and back office perspective. So we go and discuss. And basically our conclusion is that never before has been a time where banks and fintechs and big techs can combine, collaborate, act together. And you're going to see some of these messages come out in the other sessions as well. Next. Obviously, uncertain times right now, and obviously very quickly we had to scale up as a 250,000 employee company to a 97% work from home in 48 hours. And I know the next two sessions are here to talk about some of those COVID-19 specific initiatives and how they are developing. So I'll spare that. Basically, I think it's fair enough to say that the environment has never been so uncertain in recent history. And we are already seeing signs of investments being cut down. That's only natural. And you can't blame anybody because a lot of the bank sets and technology spent to make sure that they are able to get ready for the bailout program and supporting the economy and so on. So I think a lot of spend has been consumed there. So there is still a big gap. There was a gap already, and now with COVID, there is even a bigger gap. So our thesis is that the fintechs offer a great opportunity for banks to scale up and get there in a hurry. That said, fintechs itself is having a very tough time, and obviously they need capital. But we'll see from the following slides what is the real state as we see it today. Next. I know there are sessions from Sherman Lee, and I know there are sessions from CFV Ventures and so on, where you'll get a more up close and personal view to what is happening. But clearly, in terms of the deal volume and deal flows, when we compare quarter 120 to quarter 119, we're already seeing a steep decline from 8 to somewhere in the $6 billion. And our latest, the Q2 numbers are even significantly lower. From a number of deals done perspective, we already see that the 300 or so deals done on a quarterly basis from a comps perspective is down now to about 150. And Q2 is going to see, therefore, my thesis is that there are a lot of fintechs out there waiting for cash to be injected, either from PEs or from banks, and the opportunity for collaboration is again only intensifying. Next. So in terms of the pandemic itself, obviously, if there is one thing good coming out of the pandemic, it's the faster approach to digitization. And obviously, some of our research is saying that significant portion of customers are obviously reluctant to visit branches. We know that. Close to 50% say they are less likely to take a loan if it involves going to a branch or any other interaction. So in our own business, we see a big move towards digital like never before. We are engaged with several implementations of chatbots and automated voice assistants. That is the good news. And obviously, we'll wait for Aditya mentioned about the Neo Bank survey, which is coming up. And I'm sure there will be some themes there as well. But what is happening with banks is that they obviously remain underprepared. And obviously, it's a low interest rate environments, very little opportunities to make money. Even if you're in sales and trading, you're going to take a lot of risk. So it remains to be seen how banks are going to take care of the scenario. That said, we think that if they're able to collaborate with fintechs better and innovate at scale, there are opportunities for both fintechs and banks. Next slide. So now we introduce the concept of an OpenX. So in our polling, we asked questions in terms of what are the expectations that your primary bank is not meeting? And this is primary bank versus a challenger bank or a neobank. So in our survey, over 16% of consumers said that they feel that the traditional bank has a narrower range of products and services. Then we flipped the question and asked it specifically to Gen Y, Gen Zs, and tech-savvy customers, where they say that the traditional banks do not exactly match our needs or preferences. And as high as 48% say that they are likely to switch banks in the coming 12 months, right? And this is not to say that banks are dropping the ball or something. This is obviously banks have fintechs working with them. They have big tech offerings and so on. So the needle is changing, but this is what our research is showing. And when we asked customers, what are the top reasons that you are adopting banking from non-traditional players like Robinhood and others? Basically, low-cost offering is one thing that is there, but also the ease of use, the faster service, better feature functionality, and the personalization come up as key differentiators. Next. Overall, therefore, we find that the successful big techs and challenger banks with whom we work with, obviously their mobile platform works a lot better. Yes, in some cases, they've had some scalability issues. Obviously, there is customer-centric design, and part of the reason why we acquired something like Frog Design is basically for better UI UX, as some of the banks try to be the Uber and Facebook type of one-click experience. There is a lot of hyper-personalization, which is there, increasingly so. A lot of this personalization is getting embedded. Open platform model, obviously a lot of banks are trying to see how to reduce costs, because the traditional operations and technology model is coming in the way of that. And obviously, a lot of the digital banks are cloud native, AI first. More and more collaboration is something that we see happening. And obviously, the challenger banks have an agile approach which they are taking to market. And that we can see on the right-hand side of the slide, where we see the significant progress being made by each of the challenger banks, not just in US and UK, but also around the world. Little did I know way back when in the 80s when I joined Citi that one day I would say that the valuation of Alipay is significantly larger than that of Goldman Sachs. But that day has come and we see that happening as a reality. Next slide. So our research suggests that in this new wave of growth, they used to have products, they used to have assets that they deployed, they have a partnership model which was build or buy. And obviously it's about helping someone with ownership. It could be a home, it could be a car, what have you. But now each of that is changing, our research says, in terms of the ownership is moving to the gig economy model, shared access model. People don't want products anymore as what the experience is and integrated with the overall lifestyle. People just want more personalization as consumers. You know, if show me that you know me already. If you have asked me certain questions in the credit card form, why are you asking the same things in the mortgage form? And why are you not able to auto-populate that like some of the other neobanks are able to do? And again, how do we function well in a partnership model? So a new concept of OpenX demands incumbents to become inventive bank, whereby the inventive banks have a greater role to play by integrating with the lifestyle of consumers. Again, going back to my Citi days, we took a lot of pride in saying that Citi was the world's largest universal bank, but that is now giving place to the role of a bank shifting from it can be a supplier of products and services, it can be an aggregator of demand, or it can be an orchestrator like Amazon, where it has a platform that multiple banks and consumers are using. So the role of a bank is constantly changing, and I think from 2020 on, this is going to be the norm more than anything else. In a lot of our conversations, also people are moving away from banking platforms as core banking and rather would prefer to plug and play into a platform and rather than own anything that costs a lot of investment dollars. Next. In terms of customer experience, what we find out is that a lot of the investments in the last 3 years have gone into personalization, has gone into making the enterprise more agile. How do we make it more user-friendly for the customer? But the traditional banks have still some way to go from a middle office and a back office perspective, and this is clearly coming up in the research, which shows that there is a long way to go before they can challenge the neobank and the challenger bank, who are digital first, and when the front office, middle office, and back office are seamlessly combined into one platform that is able to affect the new ways of doing things. The other interesting aspect was when we spoke to a lot of the bank CIOs, while they were happy that the investment spend is going up from a technology perspective, a lot of it is again, consumed in maintaining old technology. So there is very little money left to make perceivable improvements, customer experience, customer design, and what have you. Again, this is a place where we feel the fintechs have created something which is much cheaper, better, faster, which banks have to look at in a collaborative model. Next. Given that 2020 is going to be tough, second quarter is almost over, and obviously the third and fourth quarter are going to be very tough for any business. Our recommendation again is that this is not going to be a year where you're going to make everything happen. So obviously we have to pick our battles, identify which are the areas that are showing friction to consumers compared to challenger banks and neobanks, and prioritize a couple of areas based on collaboration with fintechs. And that would be a good way to scale up and innovate, especially if it is overcoming the crucial pains involved in the middle and back office processes. Next. In our 2019 study, the similar research, we found that when we asked the banks, they told us that 67% of the executives felt that despite open banking, despite APIs, the initiatives have not been as effective as they would have liked. And when you compare that on an ROI basis, again, there was a feeling that a lot of the ROI did not happen in 2019. And when we ask the fintechs say the opposite, which is that obviously they have tried long and hard. Some of them are not having the sufficient funds to scale up. And a lot of the fintechs executives are very sad and say that look, we created this thing for a better world, but we have a very tough problem in getting the banks to buy in. And obviously, there must be real reasons why. It is not that banks don't understand it, but I think some of it is the chemistry, some of it is the other reasons, and we will discuss in the next slides on what they are. Overall, I think banks need to be more collaboration and be ready to scale up. And again, only 27% of banks say that they find it easy to work with fintechs. And again, over 6% have, only 6%, I should say. So 94% have not achieved the desired ROI. And we'll see why that is the case. Next. In terms of a fintech, we said, what do you think good looks like from a collaboration with a bank? And they said this, they said that 67% of them would prefer that banks were more agile in terms of the collaboration best practice. A similar number said that they needed a better process in terms of setting and monitoring KPIs. A lot of them tend to be, kind of grouped along with the other vendors and other strategic partners. So the fintech, obviously, in a lot of cases, small teams does not get to say anything. While they appreciated a lot of detailed governance and management, often they felt that in 58% of the time, there was no leadership involvement, and they would like to see more of that. And obviously, they want to be part of a bank's proactive innovation culture. And one of the things they found lacking 47% of the time was cultural compatibility. So in order for all the skills, if fintechs were asked the question, they said that from a product management, business model, and funding basis, they need a lot of help from the banks and PEs and VCs. So in order for bridging this gap that exists between the banks and the fintechs, and in order to help scale up, last year we created something called a scale-up qualification, where we look at a fintech and certify it for code, we certify it for cash burn, we look at these things, management depth, and interview some of the employees, see are they tech savvy, are they ready for the future proofing. So we do this exercise and give them a code, platinum, gold, silver, and so on. And each of that means something. So it makes it easy for fintechs to work with bank. Next. Equally, from a bank's process, we started certifying banks from earlier in this year, whereby we are having an OpenX Readiness Index in terms of showing what is a bank's readiness to collaborate and scale. And as you can see from this diagram, and we'll deep dive it in the next slide, very few are in the star category. Next. So the reason why they are not in the star category is not so much that they don't understand technology or business, both of which they do a really good job of, banks that is, and therefore you can see a lot more not stars on technology and business. But when it comes to people and finance, our research shows that banks have not done as good a job as they can when it comes to embracing the culture of a fintech or embracing the financial situation of a fintech. It takes a while to scale up, make money. And obviously, if some of the banks are looking at fintech like they would do a credit risk on any other company, so there are a lot of challenges in getting this right. So we hope that the coming years would see them do a lot better. Next. So in order, there have been a variety of POCs that happened. We are going to hear from a lot of speakers, all the way from blockchain to AI and other new concepts. I think 2019 up until now, 2020 has been a year where you have seen a lot of proofs of concept, and people have started some kind of innovation. But the success is going to be in terms of how much can applied innovation be done. How do we take these POCs? How do we not go after every area, but pick one or two areas and use it to work together with the fintech and industrialize and create innovation at scale? So the ROI, which we saw was not as good as it can be, gets to a better place, and we definitely have better ROI in 2020. Next. In summary, the three takeaways which came out of our research were the following. How do you onboard and have an OpenX strategy, given the customer expectations on banks, given that they are used to Facebook, Amazon, Uber for customer experience, and some of the big tech and challenger banks are already giving this to them? How can Inventive Bank catch up by leveraging fintechs? And in order to do that, how should banks look beyond the front end and obviously create a fintech type clone of the bank itself, where the front office, middle office, and back office come seamlessly together, which in turn will enable collaboration at scale. And obviously, effective collaboration requires each of those aspects, people, business, and maturity, to happen. And as we saw, people and finance are areas where they need some improvement. especially given that this is a year of the pandemic. Each of this is going to be a lot difficult, but there is a variety of fintechs out there that are doing this very well. Partnering with them can help banks get there sooner, cheaper, better, and faster. So that is my 30 minutes. Thank you. I don't see any questions, so feel free to email me or tweet me, and have a very good conference. There are some great sessions afternoon of today and all of tomorrow. So look forward to meeting those of you that have already reached out to me. Have a good conference, and pleasure being here. Thank you.
Sankar, thank you so much. Thank you also to Capgemini. As I said, that's one of the reports that I wait for it to come out. It is packed with information. I know the slides are probably a little hard in this format because they're a little small, but you can download the report. We'll post it also in the chat and the Slack. There'll be multiple opportunities, and heck, I think you can go to the Capgemini website and just download it directly. So I'd encourage you to go back, download it, and be able to go through the information, because I know that was a lot of really dense information. Though I really appreciated too the follow-ups at the end, the summaries of okay, these are the main takeaways of what you ought to be thinking given this flow of information. Well, we've had a great first couple of sessions. There's another session coming up at about 12:35 with Truist and Scott Zimmer that you won't want to miss, talking about one of our new hometown favorites here in Charlotte and the work that they've been doing. And again, you have to log back out because this session will end in a minute, and join that session when it pops in there. Hopefully you're continuing again to look at the networking, look at the virtual booths so that all the sponsors and the companies that are there have an opportunity to interact with all of you. And then there's also a session in there under the More tab in Brella about the certification program. We want to continue emphasizing that, and hopefully that you all be able to participate in the certification as well. So we'll see you in just a couple of minutes. It's been a great morning so far. Continue to hang with us and continue networking. We'll see you in a few.